in this video, I'm going to take you through doing a VAT return. Now, the one thing with VAT returns is we can't, because you have to connect to HMRC to do it in a live setting. We can't actually use the demo account to do this. So I've used one of my companies. So that's why there'll be a load of blurring so that you can't see any of the sensitive information. So to get to do your VAT return, if you go accounting and then VAT return, and you'll have a few things pop up here. So you've got a little bit of information where you can go to do your find out about penalties and stuff. You've got a little bit of information here about the VAT information, what HMRC hold for you, what's due, and everything else. Any notices you need to do, then you've got the VAT return that you need to do, as well as all the completed ones under MTD. So you just come into the one you need to do and click review. And then you will have on here the VAT return. So if you're not familiar with VAT returns, this is the summary of all the information that's being submitted to HMRC. What I would say is if you're not familiar with VAT and you're not fully understanding how VAT is calculated, how it works, or anything like that, it would be worth getting an accountant to do it so that you don't make any mistakes, because it is really easy to think the system's doing it all, Xero's doing it all, and it's just a click of a button. But it's not. You need to make sure that the information you're putting into Xero to therefore create the VAT return and send to HMRC is actually correct. So this is what it looks like. So you've got at the top, you've got the calculations. You've got VAT due on a period. So this is all the VAT that you have collected in on your sales invoices. You've got the VAT due from goods in Northern Ireland and other EU member states. So if you don't do anything in EU, then that will just be zero. Total VAT due, so boxes 1 and 2 added together. And then VAT reclaimed. So this is the VAT that you're actually able to reclaim on any purchases that you make. And then you've got the total of box 3 less box 4 equals box 5, which is the amount due to be paid to HMRC or them to refund to you if it's a minus figure. You've then got information here on the sales and purchases. So these are the total value of sales, total value of purchases, excluding any VAT. And then again, here you've got this as well for the EU stuff. Generally, what you would expect to see is the value of box 20. If you times that by 20%, it should equal the value of box 1. And that is your first check when doing your VAT return to see if that actually adds up. It won't necessarily work with the purchases, because included in this purchases figure will be things that are either 0% VAT or no VAT, zero VAT rated and things like that. So the purchases side will not always work. So that's the first thing to check. The next thing to check is your basis. You've got cash and accrual basis. And accrual is based on whether you are calculating based on the date the invoices are raised and your bills are raised. So the date coming on for bills would be the date that people give on their invoice to you. For cash, it's based on when you actually make the payment or your customers pay you. So a lot of small businesses are on a cash basis, because then you're not paying over money to HMRC that you haven't then received yourself. So just double check that you are on the right one. And then you can either check all the figures either by VAT box or by tax rate, whichever you prefer. I tend to do it by tax rate because the accountant in me understands all the rates and everything, but it'd probably be easier for you to understand to do it in the VAT box. So what you're looking here is in box 1, you're just looking to make sure that all of your sales are included and that they are all VATable and the VAT's all included. Same for box 2 if you've got EC ones. And box 3, there won't be anything on here because obviously it's calculation. Box 4 is all of your purchases. So what you need to do in here, this one is probably a bit more important than the sales one, because the sales one you're going to be doing VAT. You know if you're VAT registered, you're charging VAT. So they should all be in there. These ones are where we find a lot of errors with clients who do their own bookkeeping because they don't know if potentially the purchase does or doesn't include VAT and at what rate it is. So you need to go through here and just double check that you're happy that each of the things included in this box as purchases with VAT have VAT on them. Because if they are on here showing as VAT and they don't have VAT, you can't actually claim the VAT back for them. And being completely 100% proper in my eyes, each of these will also have a relating back transaction where it's got the bill and a copy of the receipt attached. And wherever it's blue, you can click in and you can go through to the transaction in question. You've then got your Xero rated expenses. So you can see there to make sure you're happy with the Xero rated expenses. And then you've got the total value of all sales and the total value of all purchases at all rates. They are separated out, but they're in there together. So that's what makes up box 7 and everything. So once you are happy that everything is there and everything is correct, you can then go ahead and submit to HMRC. What I will say is if there's things that are missing that you're not sure should be on there, for example, most of these will probably be in the purchases. You'd click into the purchase itself. If there shouldn't be VAT on there, you'd come in and you'd go into the bill, edit the bill to take out the VAT. So it's all going through as the expense with no VAT on, change the VAT setting, and then you can rerun this report. If you find there needs to be more adjustments, this is where you do need to get an accountant involved, because this is where it could get quite complex, and I would not recommend doing this yourself without advice unless you are fully trained as an accountant or bookkeeper. So I'm not going to go into what all that means because I said you will need accountant or bookkeeper advice to do that part. But once you're happy, everything is correct, you can then submit it to HMRC. And you click on there, tick to say that you're happy, and then you will submit it. And that's it, it's submitted. So now it's entirely up to you how you do this. I personally prefer to create draft bills because then it goes into my bills to pay and I don't forget to make the payment. If you're on direct debit, then I wouldn't worry about that because the direct debit will be taken and you can just reconcile that when you're doing bank rec. Or if you now straight away go and set up the payment, again, don't worry about doing it as a draft bill. When the payment comes out, you can just put it as HMRC and VAT. But if you're going to be doing the bill, paying it later, I would always recommend creating a draft bill for your return. It will then take you to a bill and you can approve this as normal, and it will then sit in your awaiting payments like all your other bills, so you can remember to pay it.